Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what in the hell is happening and what we can expect moving forward. Fresh start to the month of August, so that's always exciting. But yeah, let's just discuss it, let's talk about it, let's figure it out as usual. If you enjoyed the video, don't forget to hit that like button. This is not financial advice. I'm not a financial advisor. And again, my membership section on YouTube is linked down below. It is live, $2.99 a month. I essentially share my intraday thoughts and give you chart updates intraday as the stock moves live throughout the day. So check it out if you're interested, with the link, of course, down below. So moving right into it, Tesla looking like it'll be closing the day down just about 2.5% roughly on the day, closing at just about $261 per share. Compared to the market, definitely a bit of an underperformance. The market itself being somewhat flat, slightly in the red, but not too much in the red overall. Right, with SPY still dancing on the top part of this channel, QQQ dancing still kind of in the middle over here, but definitely starting to find some consolidation around here with a bit of a bearish divergence setting up. So, you know, we're in a bit of a situation here. The VIX definitely finally start finding a little bit of a life and a little bit of bounce, but you can see it is definitely finding a base over here. So we'll see with a bit of a bullish divergence. So we'll see where this overall takes us in, you know, the next couple of months. I do think that August should be a little bit interesting, but I do think September is where the party really is going to start, at least to the downside in my opinion. But we'll see. You never really know for sure. But with that being said, Tesla, of course, let's go to the 65-minute chart actually. Actually, no, we'll start with the daily chart, right? There's only a few things to talk about in the daily chart. The first of which is going to be, of course, the simple moving, the exponential moving average, the 21 EMA, which we're now once again, what do you know, back below it, right? Like I said several times, right, the two candles that we did have that did close either at or slightly above, being this one. This one's pretty much right at it, and this one here, right? Not the most convincing, right? Every time we've had these closures above, I kept saying how it's not, you know, it's better than being under, but it's still not that convincing, right? We're still definitely treading on thin ice over here. And today is another example of that, where we just got another rejection falling down from that overall level. But the more important thing to understand here is the fact that, like I said many times as well, on top of the 21 EMA, of course, but you know, Tesla really wants to break above about 267 to 270 especially, right? That 270 level is crucial to break above. And until Tesla breaks 270, I don't think the move upside is going to happen, right? However, of course, if we do break 270, I do think 280 is going to be most likely hit, or at least pretty damn close to it, right? But the fact that it's not, and the fact that we keep getting rejected is not a good sign. Now, as you can see over here, I have, you know, 4 blue lines. The reason I have 4 blue lines here is pretty simple. We're in essentially one of these two patterns. They kind of result in the same thing, and they're honestly extremely similar patterns. It doesn't really matter too much. It's just a matter of which, the only thing that changes really is the, like the levels to break, I guess, that are meaningful. Ultimately, it's extremely similar overall. Now, this is the way it kind of looks like, right? So we have, of course, the massive fall we've had since earnings, right? For all the way from pretty much $300 almost, right? All the way down to about 255-ish. That's the pull. And then from here, we're consolidating, right? And then from here, you can see we have one of two things. We either have a bear flag or essentially a bear pennant, whatever you want to call it, right? The bear pennant and the bear flag. So the first of which is going to be the ones that are kind of parallel to each other, right? The ones that are just going straight horizontal. You know, that's kind of the first one to look at, right? And that's where the 270 really comes in, right? As you can see, every time we come up to this general area, except for this one candle, which we did go above it, but completely collapsed right back under, which isn't great to see. You know, every time we come up to around this, you know, 270-ish mark, or at least pretty darn close to it, we're just getting rejected heavily by it every single time. Came up, massive rejection. Came up again, pretty decent rejection once again. And we're kind of just going sideways in this kind of consolidation period. Unfortunately, like I said, these are bear flags or bear pennant, or whichever one you want to look at, which again, as the name suggests, are a bearish pattern, right? Similar to a bull flag, massive rally, consolidation, continue the rally. Now it's the opposite. Decent fall, consolidation, and then the fall continues, right? That's at least what I personally view as us being in right now. And the only way that breaks to the upside is, of course, that 270 break. The other option is, of course, this kind of bear pennant right here, where, you know, the lines are kind of, you know, meeting together, getting tighter and tighter and tighter, where we've had these massive swings up and down, and you can see it's kind of getting, you know, less aggressive, right? We went all the way down here and all the way up here. Then when we went back down again, we didn't go as low, and then when we went back up just literally the other day, we didn't go as high, right? Pretty close, but not as high. And you can see we're kind of getting tighter, and this can also potentially play out, and it only might take a few more days. I think potentially it can play out Probably like this week, potentially early next week, but there's a decent chance it plays out this week and we really get to see the direction of this movement because we of course have Apple's earnings on Thursday, and I believe Amazon is on Thursday as well, if I'm not mistaken. Could be incorrect there. I think Amazon is on Thursday. Let's double check that really quickly. We go here, right, put on other data. This gives me my earnings, at least it should. I don't know why it's not. Let me take this off. Yeah, I don't know why it's not. Oh, maybe I don't have it on. That's why I don't have it on. There we go. Earnings on Amazon, right? So you can see it's coming up on August 3rd, which is going to be that Thursday, right? That is going to be the Thursday. Oh, sorry, did I say 3rd? Yeah, August 3rd. Which I believe Apple is, if I'm not mistaken, literally the exact same day. So yeah, August 3rd, which is the Thursday, is going to be a pretty massive day, ladies and gentlemen. So definitely want to be getting ready for that one because that's also what can dictate Tesla. Because again, of course, especially Apple, massive weighting, massive. It's essentially an index in itself. In all honesty, Apple is pretty much an index. So you want to be really careful with that one, right? And if Apple for whatever reason sells off, that's going to affect the market, and that's absolutely going to affect Tesla. So that's the way I'm looking at it right now, and that's probably the most easiest way to think about it right now, right? You want to wait until one of these situations break to at least either direction. Until then, we're consolidating, and I think we're going to be playing the kind of boring sideways game for now. Right. The other thing, of course, talk about is, of course, going to be not this one here. I mean, this one on the weekly is still important to talk about, right? We talked about this, how, this has been showing tops and bottoms overall, fairly accurately for the most part on a longer time frame. This seems to be a longer time frame indicator. So in this case, like the weekly, right? Great time, a great place to use this, but it's also flashing top signals pretty much as we got rejected at this overall top trend, if you will, this massive, I guess, downtrend, if you will, that we're in the red line, right? As we got rejected by that, of course, Tesla is getting a massive fall back down. I do think the worst case scenario, that's like still in the bullish aspect though, is we come down to very low 200s, like maybe even almost 200 on the dot. I think that's the worst case scenario, but I also wouldn't be surprised if we come down to somewhere around 240 is the first target. So I'll talk about the targets, right? 240 would be my first target. I do think that 240 is most likely going to be touched. I do think we'll come down somewhere in that general 240-ish range. I do think that's going to happen, especially if assuming this bear flag or pennant or whatever plays out. I think that's going to happen. That's the first target. If that doesn't hold, the next target is going to be pretty much in the 220s, which we talked about with the Fibonacci, right? That's the 0.5 level. And of course, past that is going to be the low 200s, like 215, 210, maybe 205, somewhere around there, which is that 618 Fibonacci retracement level that we've talked about many times over. That is going to be very crucial to, of course, pay attention to, which also would kind of be coinciding with this overall retest of this blue trend that we did break out of, which is great to see, but we never retested it, and that would be that retest as well, which I personally would be buying the dip. I'll be buying more again in the 240s if we get there, and I think when we get there, and of course I will be saving some dry powder for the 220s and especially lower than that as well, just in case. Never really know for sure, right? Better safe than sorry. Now that's the main way I am personally looking at it. And the final thing I want to talk about is going to be, of course, the squeeze, right? So the squeeze, you can see here on the daily. Interestingly enough, actually, I'm pretty sure I looked at it this morning. I even posted it in my membership section, but I'm pretty sure it actually showed that the red dot over here, you can see, was green, which to me told me maybe that was 65 minutes. No, it's not really sure. It's interesting, actually. I think it changed because in this morning, I swear this red dot was actually not red anymore. I swear it was a green. Or maybe not. I don't know. I can't remember exactly. I could double check, actually. I mean, I literally have all the posts right here, so we can quickly go over here and... why is it not showing? Here we go. You can quickly check. Actually, I did talk about it right over here somewhere. Yeah, see, it was green. I posted it this morning, 6 hours ago. And it actually was green, but now it's back to being red, which is really interesting to see. But nonetheless, the fact that it's back to red implies that the squeeze is still happening, right? It turned green, mainly telling me that the squeeze has decided a direction, and the direction has been decided to be downward. But in this case, the red dots are still there, which means that the squeeze is still building momentum. It still looks like it'll be to the downside because, of course, it's obviously trending down here, as you can see, right? But technically hasn't guaranteed picked a direction, though it seems a lot more likely that it'll be down than up. But again, the point is that the squeeze is still building. The big move is still building in that pot, if you will. All that steam is building up, and yeah, it's not looking too hot right now for the bulls. I'm not gonna lie, it's definitely not looking. The only thing that can break this is just some phenomenal earnings from Apple that just moves the whole market up even higher somehow, which is gonna be, I mean, miraculous, but it's very possible, of course. Definitely don't want to ignore that entirely. But that's more or less what I am seeing right now. There's really not that much more to talk about. I mean, we also have on the daily, of course, the where is it, the there's so many indicators I have now, because there's so many good indicators that I actually like using. I believe it's this one here, the 50-day moving average, which is really not too far below us. So you can see it is sitting at somewhere around $248, which I do think will come down to it, which will make us enter that 240s range. But whether or not we just bounce right from it, whether or not we come down to the 240 itself, that's still the main question. But keep in mind, the 50-day moving average is right below us. That is where, for instance, Netflix came down to just barely below, but then ended up finding a decent bounce from as well. So maybe we'll do something similar, maybe we won't, who knows for sure. But all that being said, that's what I am seeing right now. Let me know what you think down below. TLDR, I think this bear flag is going to play out, and I think we're going down to the 240s, and then from there, that's the first target, which can be the bottom. We will see when we get there, but that's what I am seeing as of right now. So let me know what you think down below. If you enjoyed the video, don't forget to hit that like button. I'll see you next one. Peace.